What's up, Cloudheads, and welcome back to Clouded Stocks Weekly Wisdom. Never a recommendation, simply some musings and some observations. Today, we're looking at a notable book quotable, also a moving quote away from the stock market that might actually have to do with the stock market. We're going to look at 5 ETFs, diving into the top 10 holdings of what exactly is inside that ETF, showing you why it's important and how it can move the market the rest of the week. And finally, we do a lot of Clouded Stocks features throughout the week where we go over charts. We do it in 60 seconds. It's pretty fast, different time frames, yada, yada, yada. Now, we're going to slow it down. We're going to look at one single chart across all the important time frames and really break it down for you. So smash that like button, subscribe, share it with a friend, and we'll see you on the other side. Study implies concentration. A person who trades in a dozen stocks at a time cannot concentrate on one. The popular method of trading, which means the unsuccessful way, is to say, I think the market's a sale. Smelters, copper, St. Paul have had the biggest rise lately. They ought to have a good reaction. Sell 100 of each for me. Trades based on thinks seldom pan out well. The selection of 2 or 3 stocks by guesswork instead of one by reason and analysis explains many of the public's losses. If a trader wishes to trade in 300 shares, let him sell that quantity of the stock which he knows most about, of which is entitled to the greatest decline. Unless he is playing the long swing, he injures his chances by trading in a lot of stocks at once. It's like chasing a drove of pigs. While you're chasing this one, the others get away. And that wisdom right there by our boy, Rollo Tape, Richard Wyckoff, is why I do what I do. I like to day trade. I do like to invest as well for retirement accounts, for bigger picture. I like to, buy some ETFs and stuff like that. But on the day-to-day basis, I'm trading. I'm looking at 4, 5, 6, 7, maybe 10 max names, but I'm always narrowing that list down to maybe the best 4, maybe the best 3, and of those, I'm focused on just one. Now, that method works for me. Is that what you're gonna do necessarily? I'm not quite sure. But even if you're looking to swing trade, if you're looking to position trade, I think focusing on smaller lists, focusing on only the best, is actually the best way to get ahead in this game. Just my 2 cents. And from our boy, Richard Wyckoff.
You got to really be passionate and try to prepare more than anyone else, and put yourself in a position to succeed. And when the moment comes, you got to enjoy, relax, breathe, and rely on your preparation so that you can perform and not be anxious or filled with doubt.
There you have it, guys, with our words of the week. I always feel it's very important to add a little psychology element to these videos that can be often very technical because, hey, this market is 90% psychology anyways, so we always got to keep it right in here. Now, let's look at some ETFs and some charts. This is the last you'll see of my face, so thanks for hanging in. And looking in first at the S&P 500, the famous one that everybody knows and talks about. Why? $393.5 billion in assets under maintenance over here. That is just absolutely credible. That's why, of course, it's in the large blend category. And it's been around since 1993. Like I said, everybody knows this thing. Looking underneath the hood, why is it so important? Well, in the top 10 holdings, you can see 30.37% of the assets are in the top 10. They're names that even your grandmother knows. We've got Apple Incorporated, Microsoft Corp, Amazon, Nvidia, Alphabet, Google with the L and without the L, Meta platforms, of course, Facebook, Instagram, Berkshire Hathaway, Tesla, and United Health. Absolutely incredible. Always got to keep an eye on the S&P 500. Here is CLOU, the Global X Cloud Computing ETF. Hasn't been around nearly as long as SPY, of course, just around since 2019. Much smaller amount of assets under control as well, 556 million. But Big time technology, big time cloud computing. I love looking at these ETFs to just get a broad view of what a category, of what a sector is doing. You always got to dive in a little deeper and see exactly what's in there, which of course is also a really great place to get some stock ideas. So you could see this one very concentrated in the top 10, 43.24% in the top 10. Zscaler, Twilio, Netflix, DigitalOcean, Dropbox. I mean, a lot of these names I'm pretty familiar with. Really like to trade, not really any of them, but you get some excellent ideas when you look at these ETFs and you see what type of things fund managers are wanting to hold themselves. Next up, we got ONLN, the ProShares Online Retail ETF. Of course, going to be our consumer cyclicals. Fairly new as well, only around since 2018, and a relatively small amount of assets under control here. Again, we always got to dive in and see what they are holding. That is the most important part here. I talk a lot about a lot of ETFs throughout the week in the newsletter. I talk about them on the stock charts that I post. So it's very important to see what is actually inside of these ETFs. You might find the stocks that are moving the market, the most important part of this exercise. So top 10, incredibly concentrated, nearly 75% of the assets in the top 10. Amazon holding down just about a third. We got Alibaba, we got eBay, DoorDash, Coupang, Sea Limited, PDD Holdings, Xometry, never heard of those guys. See, this is exactly why I do this. XMTR, I'm gonna check you out later. Figs, that's kind of a newer IPO that you always gotta take a look at. And QRTEA, Curate Retail, that's another one I'm gonna have to check out, but that's exactly why we do this. ONLN, ba-bam. XLI, the SPDR Trust for Industrials. Been around a little bit longer here, since 1998 inception, and we've got billions in the B, assets under management over here. So a little bit bigger of a swinger. Of course, going to be our industrials. It does look like it's a little bit more spread out with the top 10 holdings. Honestly, these are not my favorite kind of names to hold, but in any of these ETFs, I'm looking for, the highest percentage of net assets that they're holding. I'm looking for the most liquid names in each of these sectors, because if you see a sector or an ETF or a certain area showing some strength, you want to know which stocks underlying are contributing to that, which ones are the most liquid, which ones are the most tradable. So like I said, we've got our industrial defensive type names: Raytheon, Honeywell, UPS, Union Pacific, Boeing, GE, Caterpillar, Lockheed Martin, Deere, ADP. I almost fell asleep just talking about these names. Not my favorite to trade, but always important to track. Lastly, we're going to talk here about ARKW, the ARK Next Generation Internet ETF. Only been around since 2014, but Miss Kathy Wood does have 1.3 billion assets under her control. Of course, a lot of our technology heavy sorts of names here. Nice little rise throughout the year. How about that? What do they got? What do they got underneath in the top 10? Well, 62.52% of the assets are in the top 10 holdings. Definitely some names that I like to trade. More volatile, names that are still trading pretty tight, like your Coinbase, Tesla. I'm jumping out of order, highlighting some that I like to trade. Shop, Roblox, Twilio, but we also got some other household names like Roku. Personally, I love my Roku box. Use it in multiple rooms throughout the house. We got Square, Block Inc. Oh, you know what? I'm gonna have to take a closer look in that. This name is a leader of all sorts. Pretty household name, pretty liquid. We got Zoom Video, Grayscale, Bitcoin Trust, UiPath. She really loves that name, that's for sure. But yeah, a lot of interesting stuff in this one, and I saw ARKW was kicking some butt yesterday. So always got to keep those funds and the underlying stocks in your barrel. And as if you couldn't tell where my mind was going looking at the ETFs, it's ARKW. Starting in on the monthly, bear with me while I draw some super loose trend lines here, because I believe this is an important area. And I also believe that is an important area. So let's zoom in for a closer look. We can see the high over here. That was in 2021. We're well off that, as we confirmed on the ETF inception here in 2014. But let's look at this little loose trend line that I just drew, kind of see what that's all about. So that was in 9/1 of 2022 that we started that. Again, we had a 2/1 of 2023 month where you could see, here, let's check it out. You can see these little wicks on each of that month, right? So all I did was connect those wicks here and extended them to the right.
Could those be key areas for ARKW? Maybe. I'm not sure. We'll see. But all I can say is this current month right here has chopped through those prices if in fact it is a key level. Another thing to look at, our 9-period line. Here we're going to zoom back out. Our 9-period line, that blue line there, is starting to curve up. We do like to see that. Get rid of this trend line. Squamp. Whoa, 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 whoa. Messing with me. Okay, here we go. So you can see the 9-month line, this blue line. We don't like that it's underneath the 26-month line. You always want your shorter time frame above your longer time frame, whether it's monthly, whether it's daily, whether it's weekly. So on every chart that we share on this program, we're going to have our blue 9-period line. We're going to have our orange 26-period line. It's the same across every single chart that we look at. So what we can see here is also this Ichimoku Cloud. We are far from that. So, I mean, really, ARKW has a long way to go, which for people like myself who like to trade some of the underlying names within, I like to see that. I definitely like to see that we have some tradable action in ARKW. I mean, look at the distance between these two lines. Once I move my cursor back down, it's going to be right in this little area up here. So look at that. The blue line, our 9-month line, is 47.66. Nice. We got a little pull from that. But to get up to the 26-month line, it's all the way up at 99.03, even entering that cloud 108.23. So still some work to go for ARKW. Let's see what that weekly time frame holds. On the weekly, it's looking like we are just trapped, stuck smack dab in the middle of this red Ichimoku Cloud. So pretty much what's going on with there is it's showing us this could still be a continued period of volatility. So let's, should we do another trend line? No, we don't need to do another trend line. You can just kind of see this bunching up of prices. I mean, we haven't really got above, let's zoom in just a bit though. We haven't really got above this hurdle right here from the week of 3/28/22. We haven't got above this hurdle right here from the week of 8/8/2022. Our most recent hurdle from 1/30 of this year, of 2023, we had a high of 56.77. Okay, just starting to pull away from that. So could it be that this whole formation is kind of a little base that we're building, looking to launch at above once we clear this cloud? I don't know. We shall see. I mean, it's funny. A lot of this program, I'm going to spend a fair portion of it saying, I don't know, because anyone who tries to tell you they know for sure is full of it. Is absolutely full of it. So all we can do is use our indicators, stack up the things that we trust to overall give us a picture of price, because that is the most important thing, more important than any piece of news that you could ever watch, is what is price doing. So this guy, I would say it could be starting a nice uptrend. We don't love that it's trapped in this big red cloud here, but this Chiku line, the pink line, always going to be pink when I show you a chart. It uses closing prices. It's plotted 26 periods in the past, so 26 weeks in the past for this one. You want that to be above all of the price bars, which currently it is. You want your 9 above your 26. We got that. Prices above both. We got that. Up ahead, let's just zoom in a little bit more here. Up ahead, span A, you want that to cross above span B. Now, span A is taken when you add the 9-period line plus the 26-period line, and you divide that by 2. That's going to give you your gray line here. You want that to be slightly above the yellow line. The yellow line is going to be span B, which consists of the 52-period high plus the 52-period low divided by 2. So the simple look of that is you're going to have a nice blue cloud forming. I'm gonna go on a limb here. We're gonna flip on the daily. I haven't looked. You're gonna have to trust me. I haven't looked. We're gonna look at the daily. I'm gonna guess we got a little blue cloud forming in the future. Let's see what's up. Oh, dang. How about that? Gotta love to see that. So you had this little red cloud here. Again, that was because span A was underneath span B. But now, scoop, whoop, flip that. We got span A above span B. Nice little ride that we could be going on here. It doesn't mean that things can't pull back, but all that means for me is if we're going to pull back, you might see more support here at the 9-period line. You might see more definitive support at the 26-period line where people really step in. But if this truly is an uptrend, if we really got the Ichimoku Cloud over here, blue, if we really got the Chiku line over here, free. Also, look at all this. Volume, right? Do you see more green, accumulation and buying lately? Or do you see more red, distribution and selling lately? I'll let you be the judge on that one. So ARKW looking pretty good from a potential investment standpoint. As I mentioned before, I do like to trade. I day trade. I like to trade stocks. But this is absolutely a name that I'll be looking at for investments, for retirement accounts, all of the ARK funds really. I keep a close eye on those because as much flack as Kathy's gotten, I respect what the woman does. Now we're going to look at two more time frames, super brief, hourly. What's going on in the hourly? Where each of these bars represents just an hour of time. So the black area here is going to show you each day. Here's yesterday. Here's the day before that. All of these little white areas, these kind of grayish white areas that you see my cursor flipping on, that's going to be overnight in between the trading sessions. So let's just look at today real quick. A little closer look on today. Today, first hour, opened up right here underneath the 9 hour, the 9 period line, dipped below, but then got its biggest volume of the day to shoot up. Eventually got to an intraday high of 59.3. Couldn't quite hold on, dragged back. I mean, nothing really too crazy or anything to see here. Closed right around that 9 period line. So leaving a lot to decide on Thursday and Friday, in my humble opinion. And last up, we're going to see if there was any more damage than suspected on the 15-minute time frame. So again, a day, here's today, here's overnight, another day, here's yesterday. We're just going to zoom in on today, where we can see the Chiku line starting to retreat underneath the price bars. Later in the day, we did get this bearish cross right here. And did it flip back? No, never did flip back. So we got this bearish cross of the shorter term average, the 9 15-minute periods in this case, over 26 15-minute periods. So, 26 of these little guys, or 9 of these guys, same kind of thing. So, like I said before, on any of these, you want blue above orange, shorter time frame above longer time frame, and that holds true with any of the moving averages that you like to use. It could be the 8 EMA, it could be the 21 EMA, whatever. You always want the shorter time frame above the longer time frame. Now, ARKW, we chopped it up on every single time frame. I hope this helped you with something. This was Wednesday Wisdom. I hope you found something in here to be wise. Give us a like, share it. Thanks a bunch.